Hi, my name is John Folsom. I'm a partner here at Wagner CPAs in our Tax and Business Services Department. There's been a lot of legislative action in Washington recently, and there's actually two different potential bills that are out there right now. One is called the Infrastructure Bill, and the other one is called the Reconciliation Bill, and it's also known as the Build Back Better bill. The infrastructure bill is what it says. It's really a spending bill for infrastructure for the country, typically the roads and bridges types of things. The other bill, which is known as the reconciliation bill or Build Back Better, is a lot more of or has a lot more of tax implications for businesses and individuals. There's some tax increases in there. There's a lot of stuff about spending on different programs for the country. There's climate initiatives. There's a whole bunch of stuff in this reconciliation bill. So really the reconciliation bill is the one that we're watching a little more closely than the infrastructure bill. The reconciliation bill has a lot of different tax provisions that have been changing very quickly, almost on a day-to-day basis. And it's been very interesting to watch, really. I mean, they've had things like individual income tax increases from 37 to 39.6%. They've had capital gains tax increases. Then literally the next day, they'll scrap all of that and they'll come up with something different for large corporations. And so we've really been following this closely to see where is this all going to end up. We're actually watching this legislation very closely at Wagner CPAs because a lot of our clients could be impacted by these various provisions. Now, again, it's from one day to the next. Sometimes it would impact our clients a lot more than the other. Most recently, as effective as of November 3rd here, one of the things they were saying is that most of the tax increases are going to be on very, very large corporations and individuals. So the corporations that do $1 billion a year, that's a billion with a B, they would be impacted. Individuals who have incomes over $10 million a year would be impacted. But there are some things that are still in even the most recent reconciliation bill that would impact a lot of Wagner clients, especially S corporation pass-through entities. One of the provisions that's in there right now, and again, these are just proposed at this point in time, but one of the provisions that's in there now is to apply the 3.8% net investment income tax to active trader business income of an S corporation. In the past, that never applied to that. So if your income's high enough, and again, these income limits would be about $400,000 or more on an individual tax return. If you're an S corporation owner and you have pass-through income from your trader business, you could be taxed an extra 3.8% on this if this bill passes as is. So that's one of the things we're watching. There was a lot of talk about lifetime gifting limits for individuals. Currently, for 2021, the lifetime limit is 11 million. Sorry, for 2021, the lifetime gifting limit is $11,700,000. There was talk about reducing that down to $5 million per person. That was in one of the earlier versions. As of yesterday, that is no longer in there. So at this point, we still don't know whether that individual lifetime gifting limit is going to still be the 11 or $12 million going forward, or if it's going to be reduced to something else. And one other thing that's in the most recent version, there's been a lot of talk about the state and local tax deduction for individuals. It's otherwise known as the SALT deduction. The most recent version of the reconciliation bill raises that deduction from the $10,000 limit that it's at now up to potentially $72,500. That's the most recent provision or proposal. There has been some talk about eliminating that cap altogether. That's not very popular politically. So I think what they're looking to do is to come somewhere in the middle. A lot of people say that the $10,000 limit is too low. So they're looking to raise that so that additional people can take some more state and local tax deductions. And that would impact a lot of our clients here at Wagner. Thank you for watching. We are keeping a very close eye on these developments in Washington, and we're very excited to be promoting a 1-hour webinar on this topic on December 7th. And we hope you can all join us at that time. We will be looking a little bit more in depth with this topic, and we will also be covering the employee retention credit, which is a very very good credit that a lot of our clients have been taking advantage of in 2021 as well.